Welcome everyone, this is Steve Dahlia. I've got the exact top of the hour, so we're going to get rolling because we have a tremendous amount of information to cover, and we're going to try to get you out of here in an hour. My name again is Steve Dahlia. My company is Dahlia Sales and Marketing Incorporated. You see my phone number on the screen and a couple of emails that I use. My main email one on top, and then the one that I use for this webinar platform that you probably got your reminder emails from. Speaking of your reminder emails, hopefully you had a chance to click on our testimonial video. We've been providing formation services in this educational class on this topic for a little over 2 years here in Florida. And we've got a couple thousand clients and literally hundreds of positive references. So hopefully you had a chance to take a look at that. Let's go ahead and get rolling. Whoops. Here's what we're going to talk about today. What forming a legal entity means. What does it mean to you as a real estate agent, and more specifically in your state, because this topic is very, very state specific. And we're going to cover that towards the end of the presentation. Then we're going to talk about how the process works, the information the Secretary of State requires to open your entity, what some of the fees are, and it's different in every state, whether or not your real estate commission has certain rules you must adhere to or not, and we'll talk about that. And then if you decide that creating a corporate entity is a good idea for you, we're going to actually provide a special incentive for today's attendees. While we've been working in the state of Florida for the past 2.5 years, we have reached out nationally. The truth is there's only about 17 or 18 states where it is conducive to realtors to incorporate. If you received our invitation for this webinar, you are in one of those states. But nonetheless, we can handle any type of entity in any state. So just give us a buzz. I'll put up the information again at the end. So today's class is specific to real estate agents, but we can handle any type of entity in any state. This screen here basically talks about how this game is the same for everybody. Whether you're brand new in the business, whether you've been doing it for a while, whether it's just a part-time venture or it's your full-time career, it's the same for everyone. You are the boss. You own your own company, whether you're incorporated or not, and you are the boss of that company. As such, you get to make decisions. And a couple of those important decisions that we're going to talk about today are things like, how do you best protect your personal assets, everything you've worked for your whole life up till now, number one. And number two, how do you hold on to as much of the money that you earn via some tax strategies that we're going to talk about. So those are a couple of the main points of today's presentation. So what does it mean? As it says here in that top bullet point, it is designed to be a separate, and that word is bolded for a reason because it is the key concept of why people incorporate. You're creating a separate legal entity, and that entity has its own privileges and liabilities distinct or separate from its owners. It can do certain things. It has the legal capacity to enter into agreements or contracts. It can incur and pay debts. It can sue, or it can be sued. Now, nobody wants to get sued, but it's actually better if your corporation gets sued than if you get sued personally, because we're separating our personal assets from our business assets. As that last bullet point talks about, the entity is going to be held responsible for its actions separate from the owner. If you are not incorporated, and I suspect most of you who have joined us today are not, and that's why you came for this information, you're probably acting as a sole proprietor. A sole proprietor is, well, what you're doing today. You're an individual, you own a business alone, because your state probably requires only the licensee to do business, right? And it's not as a separate legal entity. As such, you have no legal protection because your personal and business assets are combined under one umbrella. Another thing we see it in real estate, we see it everywhere actually, is something called a general partnership, where maybe you have a friend in your brokerage and you decide to partner up and throw some money in the marketing kitty, work deals together, split them when they come in. That would be an example of a general partnership. In a general partnership, the partners are still liable personally for whatever happens in the partnership. Quick story, I don't want to get too far off topic here, but a good friend of mine was in a general partnership. He had done a business plan for a couple of guys in Texas a number of years ago, and they paid him to do the business plan, and they also gave him a 2% equity stake in the business. Well, so he took the 2% equity stake in, it was actually a partnership, and 3 years later they got sued. Well, he went to court because he was named in the suit, even though he was only a 2% partner, and unfortunately for him, these guys lost the judgment for $15,000, and unfortunately my buddy, even though he only had 2% interest in the company, had to pay the entire $15,000 because the other two partners didn't have any assets at the time of the judgment, so he was forced to pay the whole thing. So it's pretty important that A, you're in the right structure, B, your structure is set up correctly. So what are your options? Well, you can be a corporation, and in some states, like here in Florida, realtors get what's called a professional status, so they become a professional corporation, and here in Florida that would be a PA. So your options are to be a corporation or to be an LLC, a limited liability company. Now I will tell you, most of the people on this call for the states that we invited to this web presentation, you are in states where the predominant entity is an LLC. Here in Florida, the predominant entity is a PA, but most of you are probably going to be looking at an LLC. So let's talk about the different types of corporations and how they differ or are similar to an LLC. With regard to corporations, there's two types that we're going to talk about today. The first is a C Corp. C Corp, if you look at that picture on the right, we're trying to depict big companies. Mobil Exxon, Best Buy, Microsoft, they're all C corporations. The good news for C corporations is the owners have that separation. They have the limited liability with the personal asset protection that we just talked about. The bad news for the C corporation owners is that, well, the C corporation itself, they have something called double taxation. So you see my company logo up on the top right of the screen, Dahlia Sales and Marketing. If Dahlia Sales and Marketing Inc. were a C corporation, here's what would happen. By the way, that company is owned by my wife and I. So let's say it was a C corporation. Dahlia Sales and Marketing Inc. has to do a corporate income tax return every March 15th. And I'm making up numbers, but let's say we earned $100,000, and let's say we had $25,000 in expenses. So we had $75,000 left over. So our company would pay tax on that $75,000. So the corporate tax rate, I think it's like 36% or something like that. But then, if that were the only thing we were doing, we still need to be paid out of that company. So my wife and I both need to pull money out of that company to live. And then we have to pay personal income tax on that money again. So that's how double taxation works. So the subchapter S corporation was created to avoid that and give smaller businesses a chance to open and thrive without getting hit with that double taxation. So a subchapter S corporation has all of the benefits of a C corporation from an asset protection standpoint, except it enjoys something called flow-through tax treatment. So same scenario, Dahlia Sales and Marketing Inc., it is actually an S corporation, and we'll talk about how we make you an S corporation towards the end of this presentation. So as a corporation, it still has to do its tax return every March 15th and send it in. So same scenario. We earned $100,000. We had $25,000 in deductions, so we netted $75,000. This time, as an S corp, we don't pay any corporate income taxes. that $75,000 flows through to our personal income tax return, and when we spend it there, we pay tax on it only once. And I've got a chart that's going to show you to the penny how that breaks down. So that's a corporation. So really, for us on the call, C corporation is not ideal. S corporation is the filing status we want from the IRS. The other option is to be a limited liability company. And again, as stated, most of you on the call in your respective states, your predominant entity choice will be an LLC. We separate them because it really is a different animal. It is sort of a hybrid between that sole proprietorship and partnership that we talked about earlier and a corporation. So the physical structure of it notwithstanding, the benefits to you are the same. You still get to enjoy the limited liability that a corporation enjoys, and you still get to enjoy the flow-through tax treatment that an S corporation can enjoy. So about this point in the presentation, people are starting to scratch their heads and say, well, which is better for me? So we put up this little screen here to kind of show you that they are really more similar than they are different. So the only real difference is a corporation or a PA here in Florida. A corporation has to have a yearly board meeting and keep minutes of that meeting. So it's not a problem for people here in Florida, because the good news is, unless you ever get sued or audited, nobody's going to ask you for that, right? So, and most of you are probably doing it anyway when you do your business plans with your broker or your sales manager or your team leader at the end of the year. You write down your business plan, you sign it, you date it, and you put it in the file, and that can really function as your corporate minutes for your yearly board meeting. So here in Florida, we see a lot more PAs, but in just about every other state, the predominant entity is an LLC. An LLC is wildly more popular than a corporation in every state. It's a little bit newer entity, and the reason why it's so popular is it's a lot easier. You don't have the annual meeting or the corporate minutes requirements, and it's pretty flexible from an ownership structure. But maybe not for you, because your real estate commission will probably say you have to be the only owner of your entity, and we'll get into that later. So let's talk about the main benefits why people incorporate. If you went out and Googled, why should I incorporate? Probably the most search returns you'll find are out there for personal asset protection. Keeping your business assets separate from your personal assets. But I believe most realtors do it for tax flexibility and tax savings. And there are a couple of other great benefits you get, like adding credibility to your business and actually reducing your risk of an IRS audit. So let's jump into some of these. From an asset protection standpoint, you know and we know that we live in a litigious society. Everybody has gone absolutely lawsuit crazy. So that second bullet point there talks about how operating with a corporate entity helps protect your personal assets. Both corporations, here in Florida, a realtor corporation is a PA, and LLCs allow owners to separate and protect personal assets. Why? Because you'll be operating under a corporate veil. That corporate veil is that imaginary or that virtual wall between the assets of your corporate entity and your personal assets. So if you're driving a prospective buyer around, you get into a fender bender, they decide to sue you. Yeah, they'll probably sue you personally as well, but if you're running a correctly set up, compliant organization, you will probably make a case to the judge that no, they shouldn't be suing you personally. They should only sue your business entity because this happened in the course of doing your business. So, I live here in Florida, as I mentioned, so I drive up and down I-95 and the Turnpike a lot, so I see these billboards everywhere. So these guys and ladies know it. They know that, people are ready to settle these lawsuits, so we've gone just absolutely crazy. And if you ever find yourself looking to sue somebody and you're not quite sure who you could potentially sue, there's even a website for that, whocanisue.com. It's actually an attorney referral system, but I think it helps drive home the point that protecting your personal assets is a really important thing to do, because unfortunately our whole society has gone lawsuit crazy, and more unfortunately realtors do get sued. Hopefully it's not happened to you. Hopefully it won't happen to you. But if you look at this little screen here, I pulled this, and you can Google this. If you just Google Rice Insurance Services, 10 most frequently made claims against real estate licensees, you'll see this list plus all of the detail on each of the reasons. But you'll notice it says top 10 most, not all of the reasons why realtors get sued. So my attention goes to number 5, bodily injury or property damage. It can happen. The more you're out there, the more homes you show, the more you drive people around, even if they're following you, the higher the probability is that something's going to happen over time. So we surely hope you go your whole career and you never get sued. But if you ever do, having a corporate entity will protect and separate your personal assets from your business assets. But we know one thing. Every year you're in business, you're going to have to do a corporate tax. You're going to have to do a tax return. You don't have to do a corporate one unless you're incorporated. And every year you do your taxes, what is the main goal? Well, a friend of mine works for the IRS, and he says the correct answer to that question is to pay only what you're legally obligated to pay. I will tell you this, that realtors, surely here in Florida, because only about 10% of the licensees are incorporated, it's probably similar or lower in your state, they just don't take advantage of this benefit. And if you think about it, it is very, very sad, because taxes are your one single biggest expense every year. You spend time, I know I do, I spend time fighting with my cell phone provider, my cable provider, if my bill looks a little higher, to what? Save $50, $70, $100 a month? Yet, if we're not incorporated and we're earning money as a real estate professional, we are literally throwing money away every year. So the point of this presentation is to help you get educated on this topic so that you can take action and keep more of your hard-earned money. Let me show you how the math works. What we're going to show here is, in the middle column of this simplified tax example, we're going to show you how the taxes work today. I used, and it is different state by state. If you look in the middle on the left there, Florida state tax. It's whatever your state tax is, that's what it's going to be there. But let's just set this up. So first of all, this is a simplified tax example. So we're not dealing with deductions. This particular realtor, we'll say it's a female in Florida, but just plug in your own state, right? But the bottom line is she earned $60,000 of what we'll call adjusted gross income. So maybe she earned 85 or 90 and she already took her deductions out of that. The very first thing she needs to do in the middle there where it says taxes on the left is she needs to pay a self-employment tax of 15.3%. Now, self-employment tax is comprised of two components, Medicare at 2.9 and Social Security or FICA at 12.4. So if you look at that, that's $9,180. Now, as we move down to the next chunk of taxes, she's in Florida, so fortunately here in Florida we don't have a personal state income tax, so she doesn't pay any. You probably have one in your state. So whatever that is, it's constant. And then Your federal tax, that's also going to be the same for everybody based on your income bracket and your filing status. So for her, that puts her in the 28% tax bracket, and that's another $10,835, or a total of $20,015. So remember, she earned 60, she paid 20, so that's about a third of her total money, right? So it is probably the largest expense that she has. So it's probably something we want to look at and learn what are the techniques we can employ to reduce that number. So let's take our direction to the third column over to the right now, and let's look at her scenario if she had a corporation or an LLC. Same 60,000, except this time, whereas in the sole proprietor column, how most of you are doing it today, she had to take all her money as a salary, and every dollar she earned was subject to that 15.3% self-employment tax. When you own a corporate entity, yes, you own it, but you also work for it. So the part of you that works for the corporate entity takes a salary. But as an owner of a company, why do people form companies? To make profits, right? You get to take those profits. We call those distributions. So let's look at this slide here. Let's look at this next section here. So all we did is we took the same 60,000, except this time on our tax return, we're just putting it into two separate buckets. We're saying we paid ourselves a $24,000 salary, and we took $36,000 in profits or distributions. We'll talk more about this in a minute. You'll notice the self-employment tax goes way down here from $9,180 down to $3,672. And the reason for it is we only owe that money on the amount of salary we take, right? So whatever we take as profits, yes, we still pay federal income tax on it, and that's why this next section here didn't change, but we don't have to pay the 15.3% self-employment tax on it. So let's look what that did to the total taxes due. It took her from a total of $20,000 down to $14,507, or a savings of $5,508 a year. Oh my goodness, look at that number, 5,508 versus 60,000. It's approaching 10% of her total gross, and if you think about it, if she earned 60 in the sole proprietor column and she paid 20 in taxes, that means she netted $40,000, and $40,000 divided by 12 is $3,333 a month. So that 5,508, it's not quite 2 months, but it is approaching 2 months of work. Every day you get up and toil in your real estate business just to pay this difference. Not to pay all your taxes, just to pay the difference in taxes that you're overpaying because you don't have a corporation. Now let me tell you a couple things about that salary versus distribution. The IRS looks pretty close at that, and they want to make sure you're paying yourself a reasonable salary. I follow a gentleman by the name of Sandy Botkin, and he's a pretty accomplished guy. He's a CPA and an attorney. As an attorney, he used to work for the IRS and train the other attorneys on the tax code. So Sandy knows his stuff, and he wrote a book called Lower Your Taxes Big Time. And in Sandy's book, he says that the sweet spot of a distribution is about 40 to 60%. So it's not up to me to give you financial or legal advice in this web presentation, but I just want to share the concept with you. At the end of the day, the amount of percentage you will take as a salary versus distribution is up to you and your tax advisor. And again, the IRS doesn't tell you how much you need to take. They just tell you you must pay yourself a reasonable salary. So sometimes people look at this math and they go, well, why can't I just take my whole $60,000 as a distribution? And the reason for it is the IRS says you must pay yourself a reasonable salary. So a pretty substantial savings there, right? Additional benefits that you get by being incorporated are adding credibility to your business. Having a corporation or an LLC after your name helps you stand out and separates you from the pack, because remember, here in Florida, which is a pretty easy state, inexpensive state to incorporate in as a realtor, even though the real estate commission has some rules on us down here, it's still pretty good. So even at only 10% here, maybe a little bit more in your state, still the vast majority of realtors are not incorporated, so you're going to stand out. It's going to help you increase credibility and separate yourselves from the pack. It's going to tell your buyers and sellers that you understand business, you're an astute business person, you're financially savvy and financially literate, because you're doing the things in your business to help protect yourself and to hold on to more of your money. So who would a prospective seller rather have a fiduciary relationship with? Someone who doesn't understand or practice this, or somebody who understands business and is already employing these certain techniques in their own business? So maybe they're going to look at you in a more favorable light when you call them to list their property. Those that do incorporate typically add it to all of their marketing materials after they do. The next thing that we're going to talk about is how being incorporated, specifically as an S corporation, and we're going to talk about that at the end, actually reduces your risk of getting audited by the IRS. The Wall Street Journal did an article, it's about 5 years old now, where they said that S corporations get audited at the rate of 10 times less than the way you're probably doing your taxes right now as a sole proprietor, itemizing your deductions on Schedule C. So they interviewed CPAs, tax attorneys, and people who were getting audited, and they looked at a few things and they said, well, you know, the sole proprietor with the Schedule C, those are such easy audits to do, and they have such a high level of illegal deductions on them. The IRS typically goes after them rather than they do go after the smaller corporations. Even if you're earning $150,000, $200,000 a year, that's a small corporation for the IRS business auditors. So they're not typically looking as close as they are at those as they are to the sole proprietors itemizing their deductions on a Schedule C. I don't think I mentioned this in the beginning, but I want to take just a minute to talk about how incorporating is also very beneficial for investors, and we're getting more and more investors coming to us every day. Let me just set this screen up for you here. Made up scenario: an investor has 6 properties. You see them on the top, listed 1 through 6. Let's just say for this example that each of those properties is worth $100,000. Let's say somebody in property number 2 slips and falls and hits their head on the stairs. And, you know, they've seen all those billboards that I had up earlier. They know the whocanisue.com website that we showed earlier. So they decide to sue everybody. But the first person they sue is who? It's the property owner, right? So in that scenario on the top, if a person in property 2 sues the owner of those 6 properties and wins in court, and let's just say they won a judgment for $600,000, and those 6 properties are worth $600,000, what happens? The owner loses all of the assets of all of his properties. So what the savvy investors are doing is they're setting up separate LLCs for each of their properties. They're putting those properties in the LLCs. Same reason why you're going to put your real estate business in an LLC or a corporation, to separate it and keep it away from your other assets. Same thing here. So now let's look at the bottom. Property 2 is now in LLC 2. Same scenario. Tenant slips and falls and hits his head on the stairs and decides to sue, except now he goes to court and he wins the judgment. The most he can win here is all of the assets of LLC 2. LLC 1, 3, 4, 5, 6 have nothing to do with 2. They're completely separate. So still not a great day for the owner of these properties, but a lot better a day than it was if he or she didn't have the separation like we showed above. Now, and we're going to talk about pricing and fees here in a second. So the good news is, if you can afford and you want to be troubled with setting up LLCs for each of your properties, you or your clients, that's the best way. That's where you'll get the most protection. I had a client on the West Coast a couple of years ago, and she had 11 properties. So we were talking about this scenario, and she said, yes, I get it. I understand that putting one property, setting up 11 LLCs and putting one property in each LLC is the best protection for me, but I don't want to pay you 11 times. I don't want to do 11 tax returns. And then we're also going to cover this. Most states have an annual fee you need to pay every year just to keep your corporation open and active in that state. It's called an annual report. And she said, I don't want to pay, she was actually in the state of Washington, I don't want to pay the state of Washington 11 annual reports every year. So she made a decision to open up 5 LLCs for her 11 properties. So she put 2 properties in LLC 1, in LLC 2, in LLC 3 and 4, and then in LLC 5 she put 3 properties in there. So now she's not as protected as if she had 11 separate LLCs, but she paid less money to set them up. She's got to do less tax returns, and she pays less annual reports every year to the state of Washington. And now the worst thing that can happen to her is in LLC 5, one of those 3 properties, somebody decides to sue and they win all of the assets of LLC 5, she could stand to lose, 3/11ths of her holdings instead of 11/11ths of her holdings. So I just wanted to point this out to you because many of you are investors, and surely all of you either have investors as clients or maybe are looking to have investors as clients. So you can advise them that this might be a good strategy. Just one note on this before we move on to the process. You probably need to own these properties outright. Check with your lender. Your lender typically won't want you to put properties that you have a mortgage on into an LLC, right? Even with a personal guarantee. So check with your lender. This is a great strategy, but unless you own the property outright, they're probably not going to let you do it. All righty? Okay, let's move on to the process part. Now, because this is a national audience, this is where it gets a little tricky. I do this usually for the state of Florida, and I'm always talking about Florida-specific information. So what we're going to give you at the end of this presentation is I'm going to give you a download link to our order form. But I'm going to walk you through it first, and then we're going to talk about some of the nuances in some of the states. So the first thing I want to talk about is I referenced that here in the state of Florida, only about 10% of realtors are incorporated. And I bet in your state it's similar or maybe even lower, right? And some of the reasons for that are cost. It can surely be an expensive proposition. Another reason for it is not necessarily the complexity, but the perceived complexity. Realtors sometimes think, oh my goodness, I'm going to incorporate. I need multiple months of bank statements, multiple years of income tax returns. Actually, we've made it pretty simple. On our form, we've boiled it down to the core components each Secretary of State requires to open your entity in that state. Another reason why, realtors haven't done it is, and maybe this is you, procrastination. We're all guilty of it. And a part of it is education. So we're trying to get the word out. You probably came to this event with some level of knowledge on this topic, but maybe you were looking to fill in some gaps. So we're certainly trying to provide the education. And even on the procrastination part, that's why we're going to give you an incentive if you decide to take action today. But let's get through this. So again, I'm going to let you download this form here in a second, but I didn't want to go through the downloading now to make it confusing for you. So I'm going to go through this fast because you don't have it in front of you now. You're just going to follow me on the screen. Any corporation needs a state. Some states have certain naming requirements. Like here in Florida, a realtor can have a PA or an LLC, but it must be in their personal name. Chances are in your state, you have to create a name, right? So that's different state by state, but every corporation needs to have a name. Then you need to decide what state you want to open this corporation in. Most real estate commissions, if you want to be incorporated in their state, are going to require your entity to be in the state in which you are licensed. That is surely the case here in Florida. Then on the form, you just choose your entity, and then you have to tell the Secretary of State the purpose of your company. The purpose of your company, if you're doing real estate business, you're licensed, you're probably working under a broker, and you earn commissions. You do transactions that throw off a commissions that are paid to your broker and then paid to your entity. The purpose of your company, and you might want to jot this down because I know you don't have the form in front of you yet, is real estate services. Real estate services. Now, section 5 and 6 of the form, 5 is for LLCs, 6 is for corporations. When you form an LLC, the Secretary of State of all states wants to know who's going to run it and how long do you want to keep it in business. So 100% of our clients simply check the top box to A and B. And you'll see this in a second when I give you the download link. For corporations, this section deals with the quantity and the value of shares of stock. In most states, they're going to want to issue 1,500 shares of stock for a corporation, and they're going to want to assign them a par value of 0. Par value of a stock is the least amount of money it can trade for. This doesn't really concern you, although it's a question you need to answer. It doesn't concern you because in just about every state, the real estate commissions that allow you to incorporate say you must own that entity 100% by yourself forever. So you can't sell shares to raise money, but we do need to answer this question. So again, 100% of the people check yes and yes to questions A and B. In section 7, we just need to know who the key executive, and I'll say that's singular, the key executive is, and this is you, the licensee. And in every state, this address must be a physical address. No P.O. boxes are accepted. And again, your real estate commission may have specific rules. So the example is here in Florida, DBPR, the Division of Business and Professional Regulation, allows Florida realtors to incorporate, but they must be the sole owner of their PA or their LLC. So this is probably your case as well, but it can be state specific. All right, so here's what we do when we handle the process for you. We do the name search, we handle the electronic filing to the Secretary of State. We get the articles of formation, we check them for completeness and accuracy, and we forward them to you. We also send you links to all of the forms for your tax ID and to get the pass-through tax treatment. We send you the links, but even though we've included it now in our package, so now we used to have 2 packages, an entry-level package and then a package where we did the filing, we got your tax ID number, and we applied for your S-Corp election. And now we also handle your real estate commission compliance form if it's required in your state. And we'll show you the pricing on that in a minute. And for now, until further notice, there's no expiration date on this, but it can expire at any time. We've been working with Regions Bank over the last year or so. They have a promotion that says if you open your business checking account with them, they will give you a $150 reward. Now, that's only in 16 states, and I know for a fact a number of you on this call, Regions is not in your state. So I apologize in advance for that. I will include the state list when I put up my downloads here shortly. And then, of course, anybody that incorporates, you call us anytime you have any questions, right? So let's talk about the pricing. It's different for every state. So we have a base service fee of $129 plus the state fees, and now for the tax ID and the S-Corp election, and I'll show you that in a minute. And you're going to want to check the state pricing chart that I'm going to put up in a minute. Again, there's a lot of information and it can look confusing, so I don't want to put it up now. I'd rather give it to you at the end so you can really download it and decipher it all. So every state has a different fee. So they range from as low as $50 in Colorado up to, Massachusetts charges $500 and something. So they're all over the map. And as I said in the beginning, very, very state specific. And then most states do have that annual report filing requirement, which is nothing more than a roll call from the Secretary of State wanting to know what businesses are open and operating within their borders. So they have that annual report. 5 states don't have it, but most states have it, and it ranges anywhere from $15 to $300. So here in Florida, corporation is $150. In Maryland, it's $300, right? So it's all over the map, and we give you those numbers as well. Now, the next bullet point is really, really, really important. We do a lot of homework to make sure we understand what the requirements are from the Real Estate Commission in your state, right? But it's hard for us to keep up on all 50 states because we don't really, we have different percentages of realtors coming at us from different states. So we're going to put some of this responsibility on you. We'll consult with you, and we know a fair amount about a good number of states. No Florida back and forth like the back of my hand, but we must make sure we're in compliance with the Real Estate Commission. For instance, some states, like New Jersey, the Real Estate Commission doesn't allow you to incorporate. So the last thing we want to do is take you through a whole incorporation process, charge you the fees, get your tax ID, and then you can't use it for your real estate business. So we can consult with you. I put my phone number and one of my emails up on the bottom there. So if you're confused about this, you just get in touch with us anytime, and we will consult with you about this. Again, there's really about 15 states that are really, really good for realtors. Some other states, either they don't allow you to, like New Jersey, or the fees just may be prohibitive, like Massachusetts, a $520 fee. New York State has something called a publishing fee that can be very expensive. So there are a number of states that are very good, though, and if you're confused, just give us a buzz and we'll get it all sorted out with you. To give you an idea, and this changes, right? So don't take this per law because states do change things from time to time. But just to give you an idea, let's go to the second state there, Florida. I know Florida very well because I live here and I've done about 2,000 filings. So just to give you an idea of fees, to set up a corporation in Florida, the state filing fee is $70. The state filing fee is $125 for an LLC. To maintain your entity every year, the annual report is due every May 1st in Florida. For a corporation, it's $150, and it's due the year after you set up your corporation. So if you set it up now, you don't pay it until next year. For an LLC, the annual report, it's actually 138.75. And if you look in Florida, the predominant entity type is a PA. Why? Because it's less expensive, and realtors feel having that PA after their name might add a level of professionalism to the way they look. And then if you look on the right hand side, the Real Estate Commission in Florida has a form you must submit to them. It's called Form RE16, and they charge $30 to process that form. So you'll see Arizona doesn't recognize S Corps. In Georgia, the predominant entity is an LLC. The Real Estate Commission doesn't have any fees or forms. If you go down to the bottom of the slide, New Jersey, pretty good rates, but they don't allow entities for real estate companies, real estate agents, right? So it is really, really state specific. This slide was just to give you an idea of how different it is, which is why we can't possibly go through every state, but I wanted to give you a flavor. And then this is what I'm going to give you a download link for at the end. And this is also subject to change. But this is what you will use to calculate your state fees on the order form that I'm going to give you here in a second as well. So all you have to do, again, we'll use Florida. So if you go down to Florida on this form on the left-hand side, you'll see a formation cost for an LLC is $125. For a corporation, it's $70. The annual report for an LLC, we have it listed as $139. It's actually $138.75. So these might be off by a penny or a dollar here or there, but it'll give you a very, very good idea of what you're looking at in your state. So all you really need to do is pick your state out here and then fill in those. You don't have to pay the annual report up front, but fill in the state filing fees on your form, and away we go. And if there's any questions, you just call us anytime and we sort it out. So here's how our pricing works. I already mentioned the $129 service fee, and then your state fee is whatever it is. So you're going to go ahead and consult the chart that I'm going to put up here in a minute for you. Then we have a fee for the federal tax ID number. We always do this for our clients. We always do the S Corp election. That's a form. Remember we talked about earlier how you're either a C Corp or an S Corp. If you're a corporation and you don't do this form, you're a C Corp and you get hit with double taxation. If you're an LLC and you don't do this form, your initial filing status is as a sole proprietor, and you have to pay self-employment tax on 100% of your income instead of just the salary portion. So this form is very, very important, and it must be filed within 75 days. We now include it as part of our filing. So, and then if required, that last line item, we will complete and submit back to you, like in Florida, we do the RE16 form. We fill it out, but we send it back to the realtor. They must sign it, date it, and send it in with their $30 fee to DBPR here in Florida. So if there's one in your state, that will work the same way. So your subtotal, I don't really know because I don't know your state fee right now, and I don't know if you have a real estate commission form. So whatever yours is on the form, you'll fill that out, and then we are offering a courtesy discount to say thank you for taking the time today. So however that math works out, you just fill it out on your order form, and you can use the discount code SMD75. And then just submit it to me, and I'll review it. If there are any errors, we'll fix it. After your entity is formed, so the first thing that happens in this top box on the left is you're going to receive your articles of formation. Then we're going to secure your tax ID number for you. I'm going to require your social security number for that, but I don't put it on the form because I don't want it in advance. When your entity is filed, then I'll call you for it, and then I'll do your EIN and your 2553 form. And I don't want it hanging around. If you're in a state where your Real estate commission requires you to update your license. You will handle that, or we will, we'll do the form for you. And then that bottom left box, that's kind of the most important. You're going to file Form 2553. Again, as part of our package, we do this for you, but we send it to you because you must sign it in 2 locations and date it, and then I give you the address as to where to mail it to. And really the only 2 things you need to do on this box here is the bottom 2 on the right. You want to open up a business bank account in the name of your new entity. And if you're in one of the 16 states where Regions Bank is, I'll send you an invitation to enjoy that $150 reward. If you're not, again, I apologize. Maybe there's a bank in your state. Some banks do run promotions like that. And then the last thing you need to do is update your W-9 with your broker, so on your next transaction your broker knows to pay your new corporate entity and tag that income to your new federal tax ID number. You don't want to take that money to you personally and tag it to your Social Security number like you've been doing, because that will cost you extra money in taxes. So again, here's just the benefits that we talked about as a reminder, and then here is my contact information. So now we're running at, looks like we just hit about the 50-minute mark. So I'm actually going to go and put up now the order form. I'm going to put up a download now link for the order form, and I'm also going to put up a link for the state pricing chart. So I'll put that up as well. And you can download both these forms at your leisure, and I will leave this open for a little while. And you know, on a presentation like this, I see a number of questions have come in, but so many of them are state specific. I think what I'm going to do is I'm just going to answer them offline. Like I see a couple here from Georgia and Virginia and Maryland and even Florida. Even though I do a separate event for Florida, we do have some people on the call from Florida. So rather than take up everyone's time going through state-specific questions, I will be responding to those individually. But as I close out the session here, I'll just leave this screen up for a little while so you can download the order form, download the state pricing chart. And let's see, I think there was one other thing I said I was going to give you. I don't recall what it is at the moment, but I will make sure I send it to you in the follow-up email. And we are recording this event, so I'll be closing out the recording here in a minute. And if you had to leave early, of course you won't hear me saying this right now, but I will be sending out a recording to everyone in case you want to review some of the information. And I will also be sending direct links to the order form and the state pricing chart, but you can go ahead and download those now. So I'm going to close out the audio portion of the web presentation now, but I'm going to let it run for another minute or so just so you can download those forms. So I just want to take a second and say thank you so much for taking. We finished in under an hour. That's kind of a record. I guess because I didn't have to go into a lot of state-specific stuff because we kind of handled it in a blanket fashion. But I do appreciate you taking the time to join us. I hope you found it to be informative, and I understand that, you know, everything is state-specific, so feel free to call me. Feel free to email me. If you're calling me as soon as we hang up, please understand that I might not be available because these webinars are usually pretty well attended and probably dealing with a number of inbound calls. But thank you again. I look forward to helping you with your real estate formation, and call or email me or even text me anytime. I don't usually respond to texts if it requires a long answer, but you can do that as well for efficiency. So thanks so much. I'm going to close out the audio portion and let it sit here for like another minute, and I will talk to you all very soon.